All right, I got the lumberjack look today. If you can see me on the screen, maybe not. I don't know. But here we're getting into the final section of Chapter 13 related to payroll. And again, just to emphasize, payroll is the one area where you can make a lot of mistakes and it can cost you a lot of time and money. And like I said in the last section, once you start adding employees, it creates all kinds of responsibilities and expense for your business. So you are responsible to withhold monies from your employees' paychecks for things like federal withholding, Social Security, Medicare. Plus, you have to match Social Security and Medicare. Plus, you have to pay unemployment at the federal and state level. Plus, something we're not even addressing here is something called workman's compensation. You have to pay into that if they get hurt on the job. So, all kinds of different things come into play when you start adding employees to your business. So, we're wrapping up our whole payroll discussion here with now it's time to pay for the taxes. All right. And here we go. So, we're going to pay and record withholding and payroll taxes. And understand in previous journal entries, we have journalized not only what we withheld from employees' paychecks, but also what the expenses for us, the employer, are on the payroll side. So we've already recorded all that. We've already journalized that. We've recorded the payables, these liabilities. Now it's time to pay the liabilities. And really what we're doing is we're zeroing out those liabilities that we owe to government entities, federal and state. All right. So here we go, paying the liability for employee income tax and Social Security. And understand as we start this discussion that it is very important that your payroll is recorded accurately to the penny and on time. Because if you get late payments, just one day late with the feds or the state, they can throw penalties and interest and legal action and red tape and all kinds of crazy stuff. So from the very beginning, know exactly when your payments are due and make them on time. Don't mess around with that. Okay? I cannot stress the importance from a personal experience how important that is. I was the one responsible for making deposits for my employer for all of these taxes that we're talking about here. Okay. So, yeah, make sure you pay those on time. Very important. We're making deposits to the governments, federal or state, for those monies that we're responsible for federal tax, state tax deposits. Okay. And there's this thing called a look back period. So, you start up a business, you go through a 12-month period that ends June 30th. And then after that, once you have that experience of that look back period of 12 months, the federal or state government will say, well, based on the amount of tax you have for payroll, this is the frequency you need to do or use to record or actually pay your taxes. All right. And here's the little chart here. And this is kind of detailed. And it's kind of a little decision matrix. Are the total taxes the prior quarter less than $2,500? And all the current quarter tax liabilities within a deposit period less than 100,000. Okay. If yes, you got to do them by the end of the month after the end of the quarter. If no, have you accumulated a tax liability of 100,000 or more within a deposit period, like a pay period? That's a lot of taxes. There are not going to be a whole lot of employers that fall into that category. And they're saying, if you've got that much money, we want it now. We want it the next banking day. Well, that's not most people, all right? Do you fall under the $100,000 rule? Well, then, yes, you're going to be on a semi-weekly scheduled deposit. I'm not even going to talk about that right now. No. Are the total taxes for look-back period more than $100,000 or $50,000, I should say? If yes, and at those dates. But most employers fall down here at the bottom. You are a monthly scheduled depositor, deposit taxes for the month by the 15th of the following month. So every month, at the end of the month, whatever monthly payroll, semi-annuals, bi-weekly, whatever your payroll is, you've got to deposit those monies by the 15th of the following month. And that's a scenario we're going to use here just to kind of keep things simple. I mean, you can get all hung up in the weeds with this whole deal here. And maybe you'll have some vocabulary stuff about this, but there you go. All right. So when we make federal deposits, oh, by the way, those previous regulations I just threw at you, those are all subject to change. Okay? And understand that once you decide, once you have that look back period, you need to abide by that to the letter. Okay? So here we go. New employers are monthly scheduled depositors for the first calendar year of business. So when you first start out, you're a monthly depositor. Then you get to that look back period and they throw you in one of those buckets we just talked about. Okay? Yeah, it's going to decide when you have to deposit. Federal tax deposits must be paid using electronic fund transfers. I'd love to talk more about this, and that's called the Electronic Federal Tax Payment System, EFTPS. I have used the EFTPS a lot, not only for the employers I've worked for, but even if you say you're like an independent person that like a self-employed contractor, you have to make quarterly deposits personally, individually to this EFTPS system. And the way it works is you just set up an account with the feds with your employer ID number, and you go into that electronic system and say, okay, I got to make this payment to the government. And it comes right out of your bank account that you specify in EFTPS. And that day, it gets transferred to a federal, in this case, federal tax depository where that money is received immediately. Okay. So again, right out of your bank account, it's an electronic funds transfer right into the government. That doesn't cost you anything. It just pulls money right out of your bank account. So you have to be ready to, cash flow wise, make sure you're ready to have that hit to your system. Okay? Very important. All right. And for the federal taxes, this would be federal withholding, Social Security, and Medicare. And all those deposits are made through EFTPS. Okay, that's kind of a background of how these monies actually get from your bank account to the federal bank account. Okay, all right. So here we go. Oh, and that's that last point there. Tax rules, again, they can change periodically. So you have to always be up on what's going on with federal taxes. And honestly, if you're an employer and you have an employer ID number, they're going to send you bulletins. So maybe through email or maybe through the mail, they'll send you a bulletin if things change significantly where you have to change your date or your amounts or whatever. You'll know, they'll inform you if you're part of like a email list, or they'll send you the information. So now it's time to journalize this stuff. Okay. And we come down here, paid cash for liability for employee income tax, Social Security tax, Medicare, grand total, check number 748. Now remember, keep this in mind. This is kind of difficult to get your arms around, but Social Security and Medicare are the taxes where you take it out of your employee's paycheck, but you also, as the employer, have to match their amounts. The 6.2% for Social Security, the 1.45% for Medicare. And that's kind of illustrated in this T account. Notice that this looks like we have semi-monthly payroll of December 15th and December 31, employee income tax payable, but then Social Security tax payable. Notice on December 15th, we have two identical entries. One is the $500.76 pulled out of the employee's paychecks. The same amount is what we have to match. And you see that for each pay period for Social Security. All right. That's where the 2023.06 came from. Half got pulled out of employees' paychecks, half we have to match. Wash, rinse, repeat for Medicare tax payable. Same thing. We have to match that 1.45% that's taken out of our employees' paychecks. All right. And at the end of the day, we have we're gonna journalize. We've got a debit. Again, we're just debiting the payable. We're paying down our liability. Think about liability. What's the increase side for all liability accounts? It's the credit side. So what's the decrease side? The debit side. So we're zeroing out all of these liabilities from the previous month from December. We have to do it by the 15th of the following month, January 15th, through the EFTPS system. Now, this says, I'm going to challenge the thinking of the textbook here, because this says check number 748. Disagree with that, because you're going to be doing an electronic funds transfer. It would probably be more like a memorandum entry, because you're not going to have a check. It's going to come right out of your checking account. So I kind of disagree with their logic, but we'll just kind of let it go for now. All right. And when you total it all up, you're going to end up with a cash credit of $34.94.20. So you're debiting these three liability counts for your federal taxes, withholding, Social Security, Medicare, and you're crediting cash or reducing cash for that money that the EFTPS system is going to pull out of your bank account. All right. And when it comes to journalizing that, again, we're recording it on the 15th of the following month. Employee income tax payable or federal income tax payable, whatever you have in your chart of accounts. Social Security tax payable, Medicare tax payable. Check number 748. Again, our 1, 2, 3, 4, 5-step process here. We're using the general debit column of our cash payments journal to record these three liabilities. And we have our special column for cash that we're crediting. And again, at the end of the day, your debits, and this is something that maybe we're deviating from a little bit, but always make sure after every journal entry, your debit entries match your credit entries. If they don't, you've gone off the rails somewhere. Always match up your debits with your credits. Okay? All righty, that's entry number 1. Next, okay, here we go. Date, accounts debited, check number, debit amounts, credit amounts. The check amount is the credit amount for cash credit, cash payments journal. Okay? All righty, that's recording federal payroll. Now, federal tax. Now, keep in mind, you might have state withholding as well that you have to pay to your local state entity. But here in Washington State, for example, we do not have a state income tax, so employers don't have to do that unless they have Oregon employees. But they do that for the state of Oregon for it. I've worked for employers here in Washington where we withheld Oregon income tax and send a check every month to the state of Oregon as a courtesy. All right. Next, federal unemployment tax. That 0.8% of the first $7,000 of our employees' gross pay. And we have to pay that liability. Futa taxes are paid by the end of the month following each quarter if the liability amount is more than $500. All right. Okay. We're just going to keep it simple. We'll just go with that. The last day of the following month. All unemployment tax liabilities outstanding at the end of the calendar year must be paid. So if we get to the end of the calendar year, we still haven't hit $500, then we just, January 31, we have to pay that full amount for federal unemployment tax. Futa is a short for that. Okay, we're paying that because it's a federal tax. We have to pay that through EFTPS. And again, that's totally on us as the employer. That is not withheld from any employee's paychecks. Okay? And it's similar to the deposits we make for the other federal taxes. And that's, again, just simply wiping out the liability. So here we had a liability on December 31 of $297.02, check number 749, which again, I disagree with because that would be a direct withdrawal from our account. Okay? we're debiting our liability. We have this buildup of federal unemployment tax. And again, once we reach $7,000 for each employee, we don't have to pay it for them anymore. But here we have a liability as of December 31 of $297.02. On January 31, we're decreasing the liability down to zero, right? And crediting cash. Quite simple. Okay. Pretty basic stuff. Once again, through EFTPS, through an electronic funds transfer. And we're going to journalize that like this. This would be January 31. There's our debit account, unemployment tax payable federal, check number, again, date, account debited, check number, debit amount, cash credit amount. Okay. Just zeroing out the liability, paying what we owe. We've already recorded the expense when we had the payroll. We've built up that liability over time. Now it's time to zero it out. And really, quite simply, state is going to be the same thing. Futa, State Unemployment Tax Act. There you go. State Unemployment Tax Act, Futa, be the same thing. We'll pay that by the last day of the following month, 147.42. Again, we're debiting or decreasing our liability. And by the way, glance around the room periodically if you're like forgetting, like, what's the increased side of liabilities, all that stuff. That's why we're practicing a lot of that. And we're going to zero that out like this and debit our unemployment tax payable, which we've already recorded earlier in previous pay periods, and credit cash. And we're probably going to have, I suppose we could be sending a check to the state. There's probably going to be an electronic funds transfer to some state entity, some state treasury that will receive in our money. Okay, that's pretty common at the state level. All right. For monthly scheduled depositor, when are payroll taxes paid to the federal government? The 15th of the following month. Correct. By what method are businesses encouraged to deposit federal payroll taxes? And I wouldn't even say encouraged, but maybe even required through that EFTPS system, that electronic funds transfer. It comes right out of our bank account and it's electronically transferred to a federal depository. All right. Are you like up to your eyeballs in federal tax stuff? Probably. Okay. Let's go to, let me back up here, Working Papers 13.4, and we're going to do some journalizing here on work together. I need to pull up my handy dandy calculator as usual. Let's minimize this a little bit first. Okay. And pull up my little Excel worksheet over here. All right, there we go. So there are our federal tax amounts, and you can read through this. Tesla Electric, blah, 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 is a monthly scheduled depositor. So they're doing on the 15th of the following month after March 31. Cash payments, Journal 14, using the date the tax is due with the federal government. We're going to do the same thing for Futa and Futa, federal and state unemployment, on the last day of the following month. All right. So let's get started here. First of all, date is going to be April 15th, the 15th of the month following the end of that payroll. Okay. First thing we have is, I'm going to use my little spreadsheet over here, 1320. And that's going to be federal income tax payable, check number 495 for 1320. I'm going to worry about my cash credit when I'm done here. Okay, that's federal income taxes payable. And let's check my chart of accounts here. The federal piece is going to be what? Unemployment tax payable federal. For some reason, that's not scrolling for me. I guess I need to like scroll over here. There we go. Federal income tax payable federal. There we go. Okay. So going back. Oh wait, that's unemployment. Sorry, I'm off here. Sorry. Social Security. There we go. I'm back. Social Security tax payable. Whoops, let's spell it right. And here's where we can get kind of stuck in the weeds really quick here. All right. So we had 1331.76 withheld. And I hope you remember that. I'm going to do an equals over here. 1331.76. But remember, if it's withheld, we have to match the same amount. So I'm going to say times 2. So the journal entry is going to be for 2,663.52. What we withheld plus what we match. Medicare is going to be the same thing. We withheld 311.46 times 2. That's that one member. Social Security 6.2%, Medicare 1.45%. We have to match that. And if we total that all up, I realize I could use the sum command, but I'm kind of too lazy to go find it right now. If we sum it all up, we have a total cash credit of 4606.44. So on April 15th, via the EFTPS system, that amount of money is going to come out of our checking account because we've reported it in that system. It's going to get sent to that federal depository. All right, that's entry number 1. Then we're going to move on to Futa. And this is going to be the last day of the following month, April 30th. Unemployment tax payable federal, check number 522, in the amount of, again, we're just zeroing out all these liabilities that we owe. Federal's 515.52. Don't get confused with matching because the employees aren't involved with unemployment tax. That's an employer expense. So that's what we have to pay them, $515.52. We debit the liability for federal tax, we credit cash. 115992. Now I don't have to say APR. You guys are gonna like nick me for that, aren't you? I don't need to say APR again. There we go. And again on the 30th, I'm going to say unemployment tax payable state for 523, and I've already forgotten my amount here, 1159.92. 1159.92. Okay, there we go. I'm going to take a look here. I got my check numbers. I got my three payments in my cash payments journal. So I've journalized it, the right check numbers, the right amounts. My debits match my credits in all 3 entries. I think I'm sitting pretty. Save and continue. And we wait, and we think, and we wonder. There we go. Now you're going to do one here on your own for June 30th for Sunburst stores. But before you do, tell you what, I want to make sure that what I did was accurate, that I showed you. So let's turn that, let's go back here. Sorry about that. Let's go turn that piece in for grading, that first part. Make sure I'm not leading you astray here. And I got 2.8 out of 3. It's federal income tax payable. Okay, that's where I messed up, and they nicked me. I put employee income tax payable. Why did I do that? Who knows? But while I was doing that, you probably wondered, what is he doing that for? Okay, so there you go. I misspelled that. I got nicked. Sorry. All right, so make those 3 journal entries for the on your own piece, and do the vocabulary, and you're good to go. Let me know if you have any questions. Have a great day. Take care.